what we were discussing was that what was the market's pricing in. It's very important for us to understand that what is the verdict is which was markets were pricing in. Markets were pricing in BJP will emerge as the single largest party and they will get an outside support. We don't have the final trend, but if the leads and if what we have is anything to go by, they are very close to actually forming a standalone government. That is something which markets are surprised with, and that explains why there is a surge in some of the stocks. That could be called as just a silly and a sentimental reaction, but BML, a Karnataka, Bangalore-based company is up 10%. It's a government PSU. I don't think anything changes if the government changes that. BF Utilities, the court case, it's a central court case, but you know the stock's up 7%. BEL, Bangalore Bharat Electric Limited, again it's a company which is in defense, but it's based and headquartered out of Bangalore, so because of the election verdict there, that stock has also gone higher. Karnataka Bank, it's a bank based out of Karnataka. It's got nothing to do with the state elections and who is the ruling party, but you know that's how markets they react in the short term. And look, finally, whom do we have? Mahesh Patil. Mahesh, we've been trying to find you, made lots of calls, and finally we've been able to trace you. So where were you hiding since morning?
Hello. Yeah, no, I was just on my way.
Okay, I'm glad we were able to connect you and I'm glad you were able to find time. So Mahesh, from a market standpoint, there is a message which is that the political risks which we all are worried for, the Karnataka election seems to be reducing that because it is promising some kind of continuity. So as a money manager, what does that mean for you?
Yeah, so I think election was just one of the events, okay, which was there affecting the market. Now, looking at the verdict, what it is coming out in these Karnataka elections, I think you will have much better clarity in terms of how the next general elections would be. And in that scenario, I think as a money manager, even as investors, I think one would be able to take a slightly more positive view going forward. And that has been one of the concerns, okay, which was capping the market upside. So I think with that out of the market, out of the window, you would now see focus coming back to fundamentals, how the growth is picking up, the quarterly results. And the way we are seeing that things have been fairly decent. We've seen a strong pickup in consumption. The numbers for lever which came in yesterday show a good volume growth. So, and being an election year, good spending on the ground, I think it clears a way for the market to really scale newer highs in the medium term.
Let's take the conversation forward. And Mahesh, what is your sense on the way how the macros are shaping up? I mean, are you pleasantly surprised that crude at $75, $77, rupee almost at 68, bond yields are not coming down, and markets are firm like a rock? I mean, 1.5% more, and we would be sitting at an all-time high, despite the fact that a lot has changed in the last 6 months. Markets are back to the January highs.
Yeah, that's true. I think despite some macro headwinds, what we have seen in the recent past, the markets have been fairly resilient and continue to climb the wall of worry, I might say. But I mean, if you look at historically, I think whenever crude prices have been higher, okay, we have seen that markets have been a positive. Only when they go above excessive, above particular level, okay, then it is a cause for worry. Even at current crude prices, while there has been some pressure on the current account deficit, we have seen pressure on the rupee, but still it is manageable. So nothing to really be worried about on that front. And overall, liquidity still remains fairly strong. Domestic liquidity flows, while last month saw a bit tad lower inflows, but still they are fairly healthy at around $2 billion on a monthly basis. I think all these factors are leading to the strength in the market. But by the way, the market strength is only there in a few stocks. So the breadth of the market has actually deteriorated. If you look at the mid caps and small caps, they haven't done as well. It's mainly the Nifty and the few large names in the Nifty which are actually supporting the market.
Right, Mahesh, give us your sense on where you would want to be contrarian in this market. The markets are at record highs. It seems like, the ideas that can deliver an alpha in terms of outstanding returns are getting fewer and far between as markets push to higher valuations. Is it time to be contrarian, and if so, where?
So I think being contrarian need not necessarily play out, I think, this kind of a market what we have seen. I think it's clearly where there is earnings visibility and growth is where the market is chasing, because while we've got liquidity, it's not as large as what it was earlier. So, so the money is really chasing companies or really stocks which are doing well, companies where the earnings predictability is much more certain and visibility is much more certain in the next 1 or 2 years. But at the same time, I think, yeah, one can always take a few contrarian bets where one can potentially look for a larger upside in the coming years. So sectors, I think, which have underperformed recently, and because of various reasons, but where the fundamentals are still fairly good, are sectors like, for example, in the oil and gas sector, the oil marketing companies, where we have seen them correct significantly. Again, back of concerns about government's ability to raise fuel prices, and now with the Karnataka elections behind us, I think we should see the government, the companies again taking price hikes. Again, the valuations there are very, very attractive across the board, and the companies also offer good dividend yield. So I think there is some potential for the stocks to re-rate, and that sector can be looked at as a more contrarian play. Also, the refining margins and outlook on refining margins also in the medium term looks fairly strong. So that's one sector I think one can look at. And another sector which again has still underperforming is the pharma space. We haven't seen any meaningful uptick over there despite the market rally. The earnings pressure still remains a bit, but I think that's slowly fading away. But in that sector, clearly bottom up approach and stock specific approach can give one good alpha over the medium term.
Suddenly there is a resurgence in private banks. HDFC Bank all time high, Kotak Mahindra Bank all time high, IndusInd Bank not far behind. When do you think the outperformance in corporate banks will start? Because the three names which I mentioned which are an all time high are all retail banks. Do you think one should blindly stay with retail bank, because every time people have taken a view that, okay, let's buy corporate banks, let's get out of retail banks because retail banks are over-owned, that's a crowded trade. Frankly, those arguments have not really made a lot of wealth.
So I think the banks which you mentioned, and the especially retail focused banks, have been good long-term compounding stories. I think there has been a strong credit growth on the retail side, and we haven't seen any meaningful increase in the credit cost on the retail front. This cycle has been fairly strong, and I think and considering the fact that the other banks, the corporate banks and the PSU banks have been struggling, I think it's been good market share gains also for some of these private banks, and I think that story will continue, and these stocks will continue to compound. But having said that, the corporate banks too, at this point in time, I mean, we have seen the large cleanup happen in these banks in this quarter, in the Q4, which was expected after the new RBI norms which came in. But the good thing is that we haven't seen any meaningful increase in the overall stress book. So that remains where it is. It's only the accelerated provisioning, okay, which is impacting the earnings. So I think the way the economic outlook is shaping up, we are seeing recovery across the board, some capex recovery down the line, deleveraging happening in the corporate sector. So I think there is a good case to even look at corporate bank, just even if those cyclical kind of a play. I think if I take a 2-3 year view, I think you should see, at least in the better banks where the balance sheet is fairly strong, you could see a significant decrease in the credit cost, and there is some potential to re-rate over there. So yeah, I think with the 2-3 year views, corporate banks could also be a good contrarian play at this point in time.
Would that leave the trade with PSU banks completely off the mark, or selectively in an SBI or a Bank of Baroda, there's still an opportunity? So PSU banks are still struggling after the PNB
episode, there is still resistance in terms of going aggressive and growing the credit on the loan book. And so I think given these kind of challenges, I think they would still struggle to grow. Also, raising capital for PSU banks might not be easy. While government has done the recapitalization, there's still significant amount of money they need to raise from the public market to fund their balance sheet growth and to fund the credit losses. So I think given that, except for one or two large PSU banks, we don't see any merit to, at least from a longer term perspective, look at any other PSU banks.
Just speaking with you. Thank you so much for taking the time out and chatting about the markets with us.